Hi and welcome to QBO board. It's a whiteboard that's green. So I decided to make this video to talk about the differences between the QuickBooks Online in America and that of South Africa. Most of my clients on the first engagement, when we're going through the training, I soon noticed that the terms and the terminology used in the American market was quite different to that of South Africa. Now, in South Africa, we've got our own terms, which is perhaps used worldwide, and in America, they've got their own terms, which I'm not sure who uses those terms. But they are self-explanatory after you go through this video. So to start off, I've got a list of all the American terms, which is used on QuickBooks Online. Most of them are going to be staying the same. There is one which comes to estimate, which we'll change to quote, but I'll get back to that later. For now, let's start with the first one, bill. What's a bill? Now, a bill is nothing more than a supply invoice. And we all know what a supply invoice is. It differs to an expense, and this is also something I get quite often in my training sessions. What's the difference between a bill and an expense? An expense is an outflow that the company experiences, something you paid for. Now, a supply invoice is a service that was delivered to the company, or a product was delivered, and the payment must still be done. So for an accounting term, we will raise a creditor, in the sense of liability, and we will then release and offset that liability once payment is made. So that's the difference between a supply invoice and a normal straight expense. A straight expense is something that happens while you have the expenditure, you make the payment at the same time. The next is invoice. Now, what I like about QuickBooks Online, it differentiates between a supply invoice and a income invoice or a customer invoice. So an invoice is merely a customer invoice. It's an invoice you send to a client and you are waiting to get paid. Similarly, the accounting entry in QuickBooks Online will be debtor debtor and creditor sale, meaning that when the client pays you, you will then offset that to the debtor's account. The next is chart of accounts. Now, as accountants, we know what chart of accounts are, but business owners might not know that a chart of accounts is merely the trial balance. That's your trial balance accounts. Another word that's being used quite often, especially when using the bill and the invoice and expense, is a thing called category. Now, what is category? Category, again, is trial balance. This is when you have to choose what account to use in the trial balance. And these two can get rather confusing. Category and item or service. Now, item and service is self-explanatory. It's your products that you sell to the clients. That's the actual products that you put in your inventory that you sell or purchase. So I'll put products in inventory. Now, when doing a bill or an expense or an invoice, you can either choose a category which will go directly into your trial balance account or GL account for some accountants, or an item which is in your inventory account. Then you've got an estimate. An estimate is nothing other than a quote. And a quote, we all know, is something you send to a client offering a proposal on the offers you service or the products you sell. If they accept the quote, the workflow is quite simple. The quote gets accepted and converts to an invoice, which is a custom invoice. In QuickBooks Online, because the South African market knows what a quote is, they allow you the option of changing the estimate and change it to quote. You can look out for a future video on how you can do this. The other thing on the expense side is a cheque. A cheque is nothing merely than a bank payment. Now, a bank payment can be done in various ways in QuickBooks, which is quite easy. The cheque function is not something I recommend doing because it's quite manually. Another option is pay bills. Now, pay bills is something that goes with the expenditure side when you pay a supplier. So it's called mainly a supplier payment. That supplier payment can be done either via cash, card, or loan. There's various options you can choose on QuickBooks Online. And the last one I'd like to explain today is a receive payment. Now, receive payment is the income that you receive, the actual inflow from the client. Again, you can either receive this inflow in cash, EFT, or maybe they give it into your personal bank account, which will go to a loan account. So I hope you learned something more useful on how America's terms and South Africa's terms differ, but in the workflow of QuickBooks Online, it works exactly the same. I'm hoping to create more video content specifically for the South African market on QuickBooks Online. Do enjoy your evening.